All right, it's time for AFEX Commodity Update. Now, for the week ended 14th of February 2022, the AFEX Commodity Market Summary was mixed with a number of deals in the red. We have an analyst structuring and origination at AFEX, Femi Kehinde, now with the details. Great to have you, Femi.
Great to be here, Ladi. Good morning.
Yeah, good morning. So how's the spot contract, fared since the start of the season?
Right, so a bit of a background to the spot contract. So what we've done at AFEX, given that we have the mission of enabling the transition of funds from the commodities market to the capital market and creating shared prosperity at the end of the day, the spot contract is designed in such a way that for every unit bought on the spot board, there's a corresponding unit in an approved warehouse. Generally, we've seen the performance of some sports contracts on the exchange perform return superior since the start of the year. For instance, maize has returned over about 20%, cashew over 30%, and soybean over 10%. For the week, we saw an increase in the level of performance on the exchange in terms of the turnover, the volume traded, and however, the number of deals declined significantly for the reporting week. In terms of turnover, we saw the exchange close about 2.18 billion naira trades, representing a 35% increase week on week. For the volume traded, we actually saw the execution of 9.4 million contracts, representing a 77% increase week on week. However, for the number of deals, we saw a slight decline of about 12% week on week, as 709 deals were executed. For the financial benchmarks on the exchange, the AFEX Commodities Index declined marginally by about 0.82% week on week, while the AFEX Export Index increased marginally by about 0.97% week on week. In terms of the volume traded across commodities listed on the exchange, maize accounted for over 90% of the trades, as 8 million contracts of maize were executed this week. However, sorghum, soybean, paddy rice, cocoa, and cashew were traded for the reporting week. For commodities prices, we actually saw the uptick in the performance of commodities like maize, paddy rice, soybean, and cashew, as maize closed the week at 248 naira per contract, representing a 0.63% increase week on week. Paddy rice closed the week at 230 naira per contract, representing a 1.45% increase week on week. Cocoa closed the week at 1,251 naira per contract, representing a 1.92% increase week on week. And cashew closed the week at 605 naira per contract, representing a 17.65% increase week on week. However, we saw a slight decline in soybean prices, as the commodity closed the week at 409 naira per contract, and sorghum closed the week at 227 naira per contract, representing a 7.15% decline week on week.
All right, Femi, I don't know
about.
Yeah, carry on.
For more information about our report, you could actually check our website, which is www.afexnigeria.com, or you can follow us on our social media handles at AFEX Nigeria or Comex by AFEX.
All right, Femi, but I don't know about you. I couldn't get fuel this morning for my car. But do you see the current scarcity of fuel affecting commodity prices?
So it's a dicey thing to say that right now the current cost or scarcity of fuel could actually trickle down into commodities prices. But if this current situation lingers into the short term, into the medium term, we could actually see a significant hike in commodities prices. This is as a result of the fact that most of the producers, or a significant proportion of the producers that actually produce these commodities, stay away or out of the proximities of consumers. What this means is that logistic providers are always needed in order to transport these commodities from where it is highly produced to where it is highly consumed. And at the end of the day, the prices of logistics is added or priced into the commodities prices at the end of the day. But given that this may be a short-term effect, we envisage that it might not have a significant effect on commodities prices. But we know that if this should linger into the medium term, we would see an uptick in commodities prices due to the fact of increased cost of logistics.
All right, Femi, I hope it doesn't linger. That's Femi Kehinde, analyst structuring and origination at AFEX. Thank you so much, Femi. All right, now to
Happy to
part
be
two of the conversation. Well, trading agri-commodities as an investor can be an important way to diversify, portfolios beyond traditional securities, where market realities have shown over the years that prices of commodities tend to move in opposition to stocks. And we see rising global inflation right now. Every investor is looking for that sweeter hedge. Let's talk to Michael Martins, now portfolio manager at AFEX. Great to have you, Michael. It's been a long time.
Hi, Laddie. Good morning. It's always a pleasure to be here.
Yeah, great to see you again. Well, in discussing how investors can trade, agricultural commodities, what are the critical concepts, to learn about agricultural commodities before actually trading them?
Thank you very much, Laddie, for that question. And I think it's broadly important, considering where we are in the commodity market cycle. In terms of the concepts that you would have to learn in order for you to start trading the commodities market, I think the first and maybe most important of all, would be for you to learn about the laws of demand and supply. I think that's a law that applies to any market anywhere on the face of the earth, and then and then understanding how that plays out, in the commodities market over a given, trading period. Aside from that, you also want to acquaint yourselves, with the macros, the macroeconomic indicators that affect the commodities market on a day-to-day or maybe even on a weekly, to a quarterly basis. Some of those macroeconomic indicators would be the interest rate, which fundamentally underscores, capital flows from either stocks to bonds, or maybe even alternative assets like the commodities market. You also want to follow the inflation rate, which tends to act as a lagging indicator of what has happened in the commodities market over a given period of time. You also want to pay attention to exchange rates too, because that feeds into the import parity. That's comparing the price at which some of these commodities are bought locally, in comparison to their price internationally. Lastly, of course, you also want to make sure that you're paying attention to government policy, because the government is largely interested in the commodities market and the agricultural sector by extension. I think another thing you also want to understand when it comes to investing or trading in the commodities market is also you want to understand the commodities market itself, right? So depending on the commodity that you're exposed to, or depending on the financial product that you're exposed to, you want to learn as much as possible, expose yourself to as much literature as possible, so that you're well acquainted with the price dynamics, the capital flow dynamics of the particular product that you're invested in. And lastly, you also want to understand the business, that you're invested in itself. And I think that would also feed into the second question you're going to ask, which is basically to compare, the exchange model that we have, also with the crowdfunding model. You also want to understand the business that you're in, and then make sure that the business can guarantee the returns, that they claim to be able to guarantee.
Yeah, quite interesting, because I was wondering, this whole crowdfunding model thing, most of them have failed. How do you compare with the exchange model?
I think the key differentiating factor, right, between the crowdfunding model and the exchange, based model, which is what we run at AFEX, is we are a highly regulated, entity, right? And what that means is that every single thing that we do in the organization is under the scrutiny of a regulatory agency, whether that's the Securities and Exchange Commission, paying day-to-day attention to what we do on the exchange, or whether that's with regards to the rating agencies, which help to rate our financial products, whether or not they're good enough for us to be able to serve, the end investor or even other participants across the, agricultural value chain. I think that's the biggest difference, between the exchange model and then also the crowdfunding model. Another difference would also be that when you think about the exchange fundamentally serves as an intermediary between different participants on the in the agricultural market. So on one side, the exchange acts as the buyer to the seller, and then also acts as the seller to the buyer. That's fundamentally different from what the crowdfunding model does. Another key difference would also be that with the crowdfunding model, there is a tendency to guarantee returns. So it is the case that when you put a certain capital, when you outlay capital, to the crowdfunding model, you're going to get promised a particular percentage after a given period of time. That is never the case, with the exchange model. Yes, we do have financial products that are rated by rating agencies. Yes, people can invest in these financial products on our, on our COMEX app, but it is never the case that we will guarantee any fixed rate of return for any given period of time, on the exchange with any of these financial products.
All right, but what are your thoughts on, how commodities exchange is revolutionizing Africa farming investment?
Thank you very much for that question. I think it's partly important. It's extremely important, rather, because our primary vision as an organization is to help Africa feed itself. And I would speak to what we are also doing, as a commodities exchange. And I would speak broadly about three different things that I think the commodities exchange model does. In terms of contributing to revolutionizing commodities or agriculture in Africa. First off would be capital. We all understand fundamentally that nothing grows unless capital is introduced into that system. So what we do as an exchange is to create financial products that allows for capital flow, from investors that want to invest into the commodities market, and then create that financial product so that they can have access to investing in the commodities market. Secondly, would also be with regards to infrastructure too, right? So think about some of the storage infrastructure that we have, on the exchange, really allows us to, not just aggregate these commodities, but also store them for an extended period of time, hence serving as a means to protect against price volatility of some of these commodities. That's also extremely important. Add upon that the trading infrastructure that also currently exists on the exchange in terms of COMEX and people being able to trade, commodities on the exchange. I think that's also extremely important because it not just allows for, the exchange of capital from one person to another, it also helps the ecosystem to grow in general. And I think lastly, and maybe, of course, not least importantly, would also be markets, which is basically the exchange serving as a buyer to the seller. There is a quote, I believe, in South America, which says, market is the best fertilizer. That is the best fertilizer that you can give to any smallholder farmer in any given period of time is market, and not even necessarily, NPK fertilizer or any of those other things.
All right, but with this storage facilities and funds to mop up crop, would you say Nigeria is close to closing the food production gap anytime soon?
Laddie, I honestly don't think that that's the case. And let me just give you a bit of perspective on what the scale of the problem is. So currently, as of today, there is a $65 billion gap with regards to agri-SME financing in sub-Saharan Africa alone. Right, if you take into perspective the amount of money that AFEX has raised from the capital market vis-a-vis the amount of money that trades on the AFEX exchange, and maybe even in the broader commodities market by extension, I'm not even sure that amount is not a lot, right? So AFEX did about $100 million last year. Even if you multiply that times 10 to account for every other entity that plays in the agricultural value chain, that number is still about $1 billion, which means that we'll still have about $64 billion to go. So in terms of us closing the gap, we're nowhere near we need to be, but I can certainly say that we are on the right path, and we will get there in time.
On the right path, that's a good sign. All right, Michael Martin, Portfolio Manager, AFX, great talking to you. Thank you so much for coming on the program.
You're always welcome, Laddie.
All right, we'll take a moment now.